The story of the United States did not begin only with freedom, liberty, or revolution. It also began with money, debt, taxes, and economic control. To truly understand America, we must understand its financial origins. In the early 1700s, America was not a country. It was a collection of 13 British colonies, ruled by the British Crown. These colonies were rich in land, resources, and trade potential, but they were financially controlled by Britain. The colonies produced raw materials like tobacco, cotton, timber, and sugar, but they were forced to sell these goods only to Britain. In return, they had to buy expensive finished goods from British merchants. This system was called mercantilism. It made Britain rich and kept the colonies economically dependent. For many years, colonists accepted this system. But everything changed after Britain fought expensive wars, especially the French and Indian War. Britain was now deep in debt. To recover financially, the British government decided that the colonies should help pay for it. This decision became the financial spark of the American Revolution. In 1765, Britain introduced the Stamp Act. It required colonists to pay taxes on newspapers, legal documents, licenses, and even playing cards. For the first time, Britain was directly taxing the colonies. The colonists were angry, not just because of the money, but because they had no voice in British Parliament. This led to the famous phrase, "No taxation without representation." More taxes followed. The Townshend Acts placed taxes on glass, paint, paper, and tea. The most symbolic tax was on tea. In 1773, this frustration exploded into the Boston Tea Party, where colonists dumped British tea into the harbor. Britain responded with punishment, closing ports and increasing military control. At this point, the conflict was no longer just political. It was financial warfare. When the Revolutionary War began in 1775, the colonies faced a huge problem. They had no money. The Continental Congress printed paper money called Continental dollars, but these were not backed by gold or silver. As the war continued, inflation rose. Soon, the phrase "not worth a continental" became common. To survive, the colonies borrowed money from France, Spain, and private lenders. By the time the war ended in 1783, America was free but broke. The new nation was drowning in debt. Under the first system of government, the Articles of Confederation, the federal government was extremely weak. It could not collect taxes, control trade, pay war debts. Each state printed its own money and followed its own financial rules. The result was economic chaos. Inflation, unemployment, and farmer rebellions spread across the country. The most famous was Shays' Rebellion in 1786, when angry farmers protested taxes and debt seizures. This rebellion shocked American leaders. They realized that financial weakness could destroy the nation. In 1787, leaders met at the Constitutional Convention. While freedom and rights were discussed, money and finance were at the center of the debate. The U.S. Constitution gave the federal government power to collect taxes, regulate trade, control currency, borrow money. This was a turning point. After the Constitution was ratified, a new leader emerged, Alexander Hamilton, the first Secretary of the Treasury. Hamilton believed that America's future depended on strong financial systems. His plan had three major parts. First, the federal government would assume all state debts from the Revolutionary War. This would unite the states financially and build trust with lenders. Second, he created a national tax system, including tariffs and excise taxes. Third, he proposed the creation of a national bank. The Bank of the United States, founded in 1791, was controversial. Some believed it gave too much power to the federal government and wealthy elites. But the bank stabilized the economy, managed debt, and created a strong credit system. This decision shaped American capitalism for generations. However, financial struggles did not end there. Throughout the 1800s, America faced repeated financial panics, including the Panic of 1797, the Panic of 1837, the Panic of 1857. These crises were caused by speculation, weak banking systems, and lack of regulation. Still, America continued to grow. Railroads expanded, industries rose, and banks multiplied. By the time of the Civil War, finance once again played a major role. To fund the war, the government issued greenbacks, a new paper currency. It also introduced the first income tax. War, once again, reshaped America's financial system. By the late 1800s, the United States had transformed from a fragile, debt-ridden nation into a rising financial power. But the foundation of that power was laid during its earliest years through debt, taxation, rebellion, and bold financial decisions. The financial origins of the United States teach us one powerful lesson. America was not built on ideals alone. It was built on economic struggle, financial risk, and hard decisions. Freedom required funding. Independence required debt. And survival required a strong financial system. Understanding America's financial origins helps us understand why money, markets, and power remain deeply connected in the United States, even today.